at budgets, and I want to just do a quick recap of this budgeting. Very quick recap of this budgeting. You're not writing any notes. You don't write any notes, no, because you already have the handout now. So that handout, you go to page number 40 something. If you have a computer, you simply say control find, right? Control find, and you'll be able to get it. It is there on page number. It is there on page number 44. Page number 44, you'll be able to get. Do you have it? There is a handout which has been sent now. I keep on updating it. You don't have it. That one I can bet with you. You don't have it. All right. So page number 44, I would want, ladies and gentlemen, to take you through. I share the screen. Yes, Isaac. I'm doing exactly that. Thanks for the reminder. Yeah. So I'd already done the introduction, but I can repeat again. Introduction. Budgeting is one of those most essential tools of management accountancy, used for both planning and doing what here, somebody? Controlling future activities. Through budgeting, management can establish targets, allocate resources efficiently, and evaluate performance across departments and what here? Functions. What is budgeting? Most organizations prepare budgets at least once every year. Like the government of Kenya will always do its budget for the July. Yeah. They normally do its budget for the calendar year of government, which runs from July to the following year, like that. So we do it at least once every year, commonly referred to as the annual budget, to project and control operations for the coming financial period. Although the overall budget typically includes a forecasted income statement, a budget is not merely a single document. It represents a set of detailed plans covering all aspects of business activity. Ladies and gentlemen, if you remember very well, we said that a budget, yeah, is a defined or a formal plan covering. Yeah, covering. In this case here, a defined or specified, yeah, period. Yeah. So it's a formal plan covering a defined stroke, in this case here, specified period. And of course, this has to be for the future, for the next 1 month, for the next 1 year. Once you appreciate that, then automatically you are good to go. And remember that our plan is normally quantitative. Our plan is normally quantitative. Yeah, thanks for sharing, Felista. Thank you so much. Our plan is quantitative. Now, so we're looking at an illustration there. So in a manufacturing entity, you have that paper. In a manufacturing entity, management begins by estimating expected sales units. So whenever you're doing what we call a functional budget, you as a management accountant, the very first thing you will do is to estimate how many units are you going to sell. After you estimate how many units do you want to sell, you shall be able to come up now with a production budget. Production budget now will give birth to all other types of what here functional budgets. So based on this sales forecast, they determine the required production units. You are forming a production budget. Once production quantities are established, the company can now prepare material usage budget in kilograms or liters and a labor budget in labor hours. Note, many of these functional budgets are expressed in physical units, not in monetary terms. After all functional budgets have been prepared and costed, they are consolidated into what we call a master budget, including a budgeted income and a budgeted financial what year position. Benefits of budgeting, ladies and gentlemen, I gave you these benefits very well, if I remember very well. Whenever they ask benefits of budgeting, remember budgeting are basically used by managers, by management. And what are the key functions of management? We normally say they are what here, POCC. But the managers will be able to plan ahead. So we use budgets for purpose of doing what here, somebody planning. We use budgets for purposes of organizing. So we are able to know how our chart looks like. We have the CEO, for example, here. Yeah, under the CEO, we have the Director of Finance, etc. So we're able to come up with what we call an organizational structure, and we know who is who. We know which reporting is supposed, department is supposed to be reporting to each other. So the moment we are that organized, we shall be able to now throw in resources to these various functions. So we normally use budgets for purposes of organizing. We normally, big time, use budgets for purpose of what here? Controlling. Whenever we talk of controlling, what comes to our mind? Controlling, it means that we are comparing our plans, yeah, which are our budgets, vis-a-vis our actuals, for us to get to what we call what here, somebody? It seems you guys never did this. For us to get what we call variances. So controlling, whenever you are calculating variances, you'll be able to know. For example, we had agreed with this chef of ours to use, for example, 50 packets of unga. Yeah, this is what we had agreed. So this is the plan. And if the actual, for example, is 53, then you can see in this case here, we have a variance of how many packets of unga? 3. Because the plan was 50, but they have actually used 53. So there's a difference. You see, a variance is a difference of 3. So these differences must always be explained. It is during explaining of these variances that we shall be able to put our organization under control, under our radar. All right. Now, ladies and gentlemen, let me just check the POCC. Thank you so much. Yes. Now, ladies and gentlemen, from there, we have, of course, here, the other C, of course, is communication. Yeah. Budgets like you normally see the Minister of Finance doing in Kenya. After they prepare budgets, they communicate to us through Parliament quite a lot. And then, of course, we have lastly here what we call coordinations, yes. And then now you'll be able to have all the other functions of budgets, which are incidental. For example, ladies and gentlemen, whenever you are dealing with these budgets very well, yeah, we shall be able to use them to evaluate the performance of our workers. We shall be able to use these budgets here to motivate our staff. So you can see we have all these benefits which have been stated there very well. You have the handout. We have planning. And a planning explanation, it enables management to forecast future activities and anticipate potential challenges. Controlling provides a benchmark for comparing actual results with planned targets. Coordination ensures all departments align their activities towards common organizational what year goals. Then we have authorization and delegation, because in budgets, we shall be told who has the authority to incur expenditure. In government, we call it AIE. Yeah, very good. AIE, authority to incur expenditure. This is very well defined by the budget officers. So we need to know who will be authorizing what. Establishes clear lines of authority and accountability. Then we have performance evaluation, serves as a standard for measuring managerial efficiency and effectiveness. Communication and motivation enhances communication of objectives and motivates employees to achieve set standards. Ladies and gentlemen, we have what they're calling the principal budget factor. Principal budget factor is the key limiting factor. That already we have done. Key limiting factor. That scarce resource that prevents us from achieving our maximum demand. Yeah, that's it. That resource, which is very, very scarce. So the principal budget factor, also known as limiting factor or the key limiting factor, is the resource or condition that restricts the organization's level of activity or output during a budget period. Ladies and gentlemen, I'm so sure there must be a student who is wondering, Mwalimu, why can't you just rush to a past paper and do a mathematical question? It's because whether you like it or not, your management accounting theory normally has got up to what percentage here? 35%. And I can assure you, yeah, without, in this case, ladies and gentlemen, mincing on my words, if you're not very good with the theories of MA, I will teach you again this paper next semester. I would want to teach you but teach you in this case here at a higher levels. New papers, isn't it? Advanced level. That is what we call progress. We don't want in this case here to do what the Army calls mark time. Do you know what mark time means? Yeah, in this case here, you're moving your feet up and down, but you're not making any progress. Yeah, that's mark time. Mark time. Yeah, we don't want anybody to mark time. That's really, really very bad because the world is moving. We cannot get stuck on one area. So, and the best way of ensuring that you get to see places that you've never seen before is to master the theories. MA has lots of great theories. Once you master your theories very well, 35%, you get, say, 30%. Chances are, if you just do one computational question nicely, you pass. Because the pass mark of MA is very, very small, very little. Can you guess what is the pass mark of MA? 50. Are there papers in the past you have ever done and you felt like this one I'm going to fail, but you passed? That is how CASNEB works. The pass mark is really, really low. Very, very low. I will not tell you the pass mark today because I want you to aim higher, isn't it? Let's aim very, very high up there, but just get to know that the pass mark is very, very little. And the moment you're very, very good with theories, then we shall always pass. I can see my students saying in this case here that Mwalimu, you should tell us what this pass. I will tell you. I mean, why am I here? But not now, not even today, right? Not even today. So explanation, the budget preparation process is required. No. Here is the resource or condition that restricts the organization's level of activity or output during a budget period. So whenever we talk of key limiting factor, we are looking at limitations. We are looking at restrictions. Explanation, the budget preparation process is sequential. Certain budgets depend on others. For instance, one must know the budgeted production before determining the material usage in kilograms. In most organizations, the starting point of the budget process is the sales budget. Under functional budgets, we must always begin with the sales budget. If we finish today's topic and you do not know how to do a sales budget, then please know that you will become a very useless management accountant outside there. No, that's a joke. Because everybody will be able to understand how these functional budgets are done, since the expected sales determine production and material requirements. However, this may not always be the case. Now, so you can see the definitions down there. Yeah, already we have dealt with this principal budget. Yeah, so preparation of functional budgets. So functional budgets, how do we prepare them? We have example one of XYZ company. Are you able to see that example? It's like you never got that. And please, if you are here, we have access to the Wi-Fi, right? I hope you have the password. The only thing we don't provide are mobile phones, isn't it? But maybe in future, we should be able to do that, right? So then with your permission, I want to do this XYZ Limited that is producing 3 products, X, Y, and Z. The following information is provided, for the forthcoming accounting period. So in this case here, we have the standard material usage. We have the standard cost of materials. We have inventory of finished goods. We have inventory of raw materials. We have here the required. So they want us to give them the sales budget, both in quantity and value. Production budget, showing units to be produced. Material usage budget, showing total quantities required. Material purchases budget in both quantities and value. Labor budget, showing total hours and what year cost. So let's start with the sales budget. Let's start with the sales budget. So sales budget, ladies and gentlemen, is normally the easiest. It is the one that I will always start with. So right there now we are writing everything. Sales budget. So sales budget is normally the easiest. And the sales budget, we have 3 products, X, Y, and Z. X, Y, and Z. This is very easy. So the examiner will always give you the quantity to be sold and the price. And then your role will be to give us the sales revenue. So the examiner, under the sales budget, ladies and gentlemen, the examiner will always give you quantity and the price. Yeah, there is a slight error because I gave you everything really. If you go up there, let me just write for you what your examiner will give you. You can see your budgeted sales. So X, they're budgeting to sell this at 2,000. Not sell at, but sell 2,000 units. Y, they're budgeting to sell 4,000 units. Z, they're budgeting to sell 3,000 units. Are you able to see the price per kilogram? It's given here. Price is 100. Price is 100. We have here 130. Then we have in this case here 100 what here? 50. 150. So can a very good student, please, this column of sales value, sales revenue, shall never be given to you, shall never be given to you, never. So remember, this is price per unit, isn't it? Price per, always, it's price per unit. Hey, you students who passed quantitative analysis very well, whenever you want to get sales revenue, what formula do you normally use? What formula do you normally use to get sales revenue? Price times quantity. How I wish I had some money. If I had some money here, straight away. I like that. So sales revenue is price times quantity sold, isn't it? Yeah. Or quantity sold times price, one and the same. So in short, to get, ladies and gentlemen, the sales revenue of product X, do I have the quantity? Do I have the price? Multiply them. For your revision, you can just write here 2,000, just 1 times 100, give me a figure. This is 200,000. Then we have 4,000 times 130, which will end up giving us what figure? 4,000 times 130, 520,000. Thanks, Cheryl. 520,000. Thank you so much. 520,000. Then we have 3,000 times 150. 3,000 times 150, which will end up giving me what figure? 450,000. What in this case, at the end of the day, from a sales budget, you're supposed to give us at the end of the day, it should be total sales revenue, which will really inform quite a lot. Like at RCM, we normally use this sales budget every other time. Actually, as one of the directors, this is that budget that I'm really concerned with. I don't want to look at expenses because I'm able to control that. But how many students are going to get next semester? 4,000 students. How much in this case here then do we expect to get from each student per course? Yeah, then they are able to project the sales revenue. And then I'll tell them that, you know what, some of these students are thieves. They may run away with some fees. So in this case here, do what here? Do a provision. But of course, I know you guys, nobody can ever run without fees, isn't it? Not management accounting still. Is there a management accounting student who is planning to run away with our fees? Somebody who has a free balance and will run away without paying. You'll be, in this case, yes, building your profession on a very wrong footing, isn't it? At least Irene Onyango actually has an overpayment, which is very good, but you don't refund. You can only use that money for subsequent. We have cleared. Thank you so much, Naomi. Thank you so much. We have cleared. We cannot run away with RCM's fees. That will be very bad. Thank you so much. So, but have we, that's a joke. Have we understood how to do sales budget? Why are you guys very silent? Do you have RCM's fees? No. We shall overcome. Thank you so much. Now, after sales budget, what will be the name of the next budget? Just guess. Because of the function of budgets, you must cram them. Don't look at the question, because at times even the question can be, in this case here, the next one shall always be the production budget. Even if it is the last one being asked by the examiner, you need to know it at the back of your mind that the first budget should be sales. From there, we go to production. From there, now we like that. Now, before I go to production budget, I would want to ask you, my students, an easy question. Very easy question. Now, I know all of us, we normally do the trading account, and we have done trading account from those days, immemorial. When we were in high school, in business studies, how do we get units sold? Anytime we want to calculate units sold, is there somebody who knows in the cost of sales? We normally take opening. Do you remember this? I'm alone, I will overcome. Opening stock plus what here? Plus purchases minus closing stock. So this one is for a merchandise organization. That kind of an organization that procures goods for purposes of doing what you say? Reselling, yeah. Yeah. How about in this case here, units sold? Units sold, but now this time round for a manufacturing firm. Remember, in management accounting, in most cases, we are looking at manufacturing organizations. So for a manufacturing firm, you guys should be able to talk. I should talk of what plus what plus what. Yeah, it will be opening stock, because we are producing them internally. We talk of what here, somebody? Production minus who? Minus closing stock. So I want you to write these two equations, but on the second equation, I would want you to make production the subject of the formula. And the moment you do that, then you guys, I will be able to say that you are pretty cool. You're pretty good students. And then I'll think whether I'll be able to give you a present. Remember the other, was it weeks ago, I took, the advanced management accounting students for lunch to Sarova. Yeah, we got very good food and I was able to play for them the saxophone, isn't it? So this time round, it shall be management accounting still, if they're answering my questions. And I'll be able to organize something very nice for them. And remember, now we are starting our block revision. So block revision, very, very important. If you are a student out there and you need to attend our block revision, purely for questions and answers, that is our number. We don't charge you guys who are our students here normally. You'll be able to attend our normal class as usual, where we shall be revising. But if your friends outside there would want to attend block revision for all CPA subjects, please, that is a number. Yeah. So is there anybody who has been able to make production the subject of the formula? Yeah, it's very, very easy. So you see, when you cross River Nile, you expect things to change, isn't it? So like what I will do, I will say production equals units sold, right? Plus closing, because now this is a minus here. And then minus what here, somebody? Minus opening stock. Thank you so much. Great. So then let's come and mention here that production quantity from this one, it will be quantity sold. I can use any terms. Yeah, quantity sold or quantity to be sold there. And then we add add plus closing stock minus what here, somebody? Minus opening stock. The moment I understand this, I've understood everything. Oh, yay. So then when we talk about our production budget, we have our three products, XYZ. We shall start in this case here with quantity to be sold. Yeah. And then we add what here, somebody? I'm alone. We add closing stock. And then we deduct what we here. Then we come here and deduct less opening. Less opening who? Opening stock. Less opening stock, like that. This is how I would want you to always remember the production budget. So quantity to be sold, you take closing stock as an income. So closing stock shall always be added. Opening stock you deduct, because you see, I will not want you to start memorizing the other formula and then that you want to make something the subject. It's like you're deriving the formula. Are we doing pure mathematics here? No, no, no. So then do we have these numbers? Are you able to see this quantity to be sold from our sales budget? I'm alone, I'm alone, I'm alone, I'm alone, I'm alone. Thanks, Akinyi. At least there I can see I'm not alone. Yeah, from the sales budget, I can see X is 2,000, isn't it? Y is what here? 4,000. Remember, you're talking about quantity, not money, eh? Not money. And then lastly, we have what here, somebody? 3,000. Are you able to see the closing stock of finished goods? Please don't add the closing stock of raw materials, eh? That is the mistake I normally see students doing. You can see inventory of finished goods. Are you able to see inventory in C? Inventory of finished goods. I start with the closing units. The closing units, I can see X is 600. X is 600. Y is 1,000. And then Z is what lastly here? 800, isn't it? How about opening stock? Opening stock for X, what do we have here? 500, 800, thank you so much. 700. So we have 700, they are like that. And the opening stock is supposed to be done what here, somebody da? Opening stock you deduct like that. So please go ahead and give me the quantity to be produced. Quantity to be produced. If you're not giving me numbers, I will be able to read them for you, because today we have to move speed. We have quite a lot to do. We have quite a lot to do. We have quite a lot to do. Let me stop sharing for the students to see the whiteboard. For students to see the whiteboard. So online students are giving me X is 2,100. 2,100. And then Y? 4,000. 4,200. 3,100, isn't it? Yeah, 3,100. Ladies and gentlemen, remember always, it is the sales budget followed by production budget, followed by what here, somebody usage. So we normally do sales, production, usage, and then purchases. You can draw this. This is very, very important. So in this case here, we have a student called Shah. We are doing a question, an illustration from our handout. Our illustration from our handout, which is on some page there. So sales, production, usage, purchases. Purchases. Like that. So then we can easily go to the usage budget. Let's go to the usage budget. So is there somebody who can do the usage budget out of these? Yeah, usage budget. So you simply go to the raw materials. You simply go to the raw materials. There is a place where they have told you that we have two types of raw materials. We have in this case here wood and what here, somebody? Varnish, yes. Wood and varnish. So now the titles can't be XY. The title is here because you're talking about material usage budget. It will be those names of those materials. So I'll leave you to do that because you can see exactly what is to be done there for material usage budget. Material usage budget. So we have here wood, kilograms, and then we have varnish. Varnish is paint, liters. So we have our types of products somewhere here. Products. So now there are X, Y, and what here, somebody? Z. So remember, the usage budget depends on production budget. Production budget. Usage budget comes from production. Actually, if I was you guys, I would have written there that this material usage budget comes from production budget. Comes from production what year? Budget. So this comes from production budget. So now let me ask you a question. If it comes from production budget, what does it mean? That first of all, you give us the production quantities, isn't it? Do they still remember these production quantities, these ninjas? We am alone. Do they remember the production quantities? 2,000, 4,000, and 3,000. So remember, these are the production quantities, yes. So do we know how many kilograms of wood do we need for each of these products produced? Yeah. So in this case here, we have here wood. Wood at what here, somebody? X is 5, eh? And then Y is 3. And then Z is 2. So then we shall be able to multiply to get total, isn't it? We shall multiply to get total for wood that I'll be able to write here. The first one I'm being told is 10,000. 12,000 here. Oh, I'm alone, but I'm overcoming. This 6,000. 6,000. 6,000. So if I'm the one doing this in an exam, I will come and just have like a middle column there. And then I can talk of V. Yeah, just for capturing the unit for varnish. So varnish, like we have done for wood, are you able to see the varnish needed for each finished good? Varnish, are you able to see that? So varnish, how much? 2, 2, 1. So at means multiply for varnish. So then to get varnish, I will take 2,000 units produced times what? 2, which gives me what here, somebody? 4,000. 4,000 times 2, 8,000. 8,000, 3,000 times 1, 3,000. Yeah, and then please give me totals here. 3,000 times 1. Yeah, it's 1. My handwriting is normally the worst. It's normally the worst. So totals, if you guys can't give me the total spreadsheet first, then I shall give them to you. The first one is 28,000. Are you sure that these are the production quantities really? Are these the production quantities that we produced really? Or are these sales? Remember, you have said here that this comes from production budget. No, they're sales. That is wrong. But fortunately, we learn through making mistakes. Remember, it is sales. We finish with sales. That one we shall never use it again. We can only use it now in the cash budget later. After sales is over, we throw it away. We were able to do product. So do we remember the production quantities? What do we have here, ladies and gentlemen, as production quantities? Was this 2,100? Just look at your production budget. 2,100, and then we have what here? 4,200, eh? And then we almost got 0, all of us. How does that happen? How does that happen? Because always look at what we have written here. We have said material usage comes from where? Does it come from sales budget? No. It doesn't come from sales budget. So then 2,100 times 5. So what that tells me is that Mwalimu, just slow down. Don't assume that we know. Let me slow down. Let me slow down and just teach slowly. Let's slow down. Please ask questions, eh? Ask questions. Feel free to ask questions. But last time you told me, Mwalimu, we don't ask questions ourselves because this semester, Mwalimu, we have gotten geniuses for students. So remember, this per unit wood remains, eh? This remains. So 2,100 times 5, how much do we have? 10,500 here, right? 10,500. How about 4,200 times 3? 12,600. Thank you so much. Then we have 3,100 times 2. 6,200. Then please use the same production quantities for the varnish. For the varnish, we know how much each unit of varnish is required. So like now this will be 2,100 times 2. Thanks, Moreka. 4,200. Then we have 4,200 times 2. 8,400. 8,400. Then lastly, we have 3,100 times 1 here. 3,100. For your revision, perhaps you could even make this bigger. Perhaps you can even make this bigger if I were you, if I'm feeling confused. So remember this at 2. It means I come and multiply this with the number of units that were produced. This one here for y times for 200. I can do this. This one here times 3,100. Perhaps this will make me understand better. 8,400. 3,100, like that. So then are you able to give me the totals now? How many kilograms? So Felicitas, 29,300 kgs. And 15. Yeah, thanks, $15,700. These are liters. You don't have to show them, but these are liters, isn't it? Yeah. So let's be in agreement. Especially the online students, you haven't responded there. I would want to know now, up to here, are we really together? Now we are together now. Thank you so much. Thank you so much. Great. Now we are together. So after the material usage budget, what do we do next? Go home? No. Material purchases budget, isn't it? So we do a material purchases budget. Thanks, Cheryl. Material purchases budget. Material purchases budget. Oh, I need to move a little bit, eh? We shall overcome. Never fear your father. If you think your father is blocking what you cannot see here easily, just tell him, move, move, without fearing. So can I rub this? Can I rub this? Yeah. So then, ladies and gentlemen, in this case here, next, it is the material purchases budget. Material purchases budget. So material purchases budget, oh yeah. Material purchases budget. Remember, purchases is pretty similar to production, eh? Yeah. So you'll have your two types of materials, wood, and then we have what we are calling whatever varnish. Yeah. So then in this case here, you give us materials to be used. To be used. Basically, the usage in total. So wood, you guys had given me 29,300 from the usage, isn't it? Varnish, you had given me 15,700, isn't it? So from there, what do? We add the closing stock. We add the closing stock of materials. We add the closing stock materials. And then we less what here, somebody? Opening stock. Opening stock materials. Opening stock materials. Opening stock materials. So is there somebody who is able to see those stocks? They'll always give you stocks of materials. They'll always give you stocks of materials. Yes. Yes. They shall always give us stocks of materials. Yeah. And of course, if you see, we have inventories of finished goods. Don't confuse. Don't confuse. Very many students over the 25 years that I've taught this management accounting, I always get students taking finished goods instead of what here, for example, raw materials. So you can see the inventories of raw materials. Closing stock wood is how many? 18,000, isn't it? 18,000. Varnish is 21,000. Have they given us the opening stocks for this wood? How much? 9,000. How about vanish? 10,000. Yeah, so please put this in the brackets and go ahead and give me these purchases. Give me these purchases. So do we have these purchases very easily? Do we have these purchases very easily? So Moreka Madale K, they are giving me 26 what year? There is something wrong, right? What's wrong? Closing stock for vanish is supposed to be 9,000. And I took 21,000. That's a crazy variance. For the online ninjas, is this closing stock correct? 9,000? Yeah, actually they told me long time ago, only that I chose to, so I can see we're okay now. Opening stock is wrong. This is supposed to be 21. Then it must have been a student who misled me. It must be a student who misled me. So 21,010. Let's read this together. Let's read this together. It must be. I'm not the one who just cooked figures. Must be a student who misled me. Because you can see closing stock here. You can see column of closing stock. Wood is 18,000 and the vanish is 9,000. That is closing. Remember, we start with the column of closing. And then column of opening, you can see 21,000 and what year? 10,000. So now, are we in agreement, all of us? Are we in agreement, all of us? Thank you so much. It's always good to be aligned. Yeah, so now give me the answers, please. So for wood, what do we have here for wood? 26,300, eh? 26,300. How about in this case here, vanish? 14,700. And then remember that these are purchases. These are purchases in the form of units. And because I'm going to purchase from the market, I need to change this to money. We need to change this to money. So do we know the purchase price per unit? Purchase price per unit. Do we know that? Wood is going for how much? Are you able to see 8 per kilogram? Yeah, 8 per kg. Yeah, this 8 per kg. How about vanish? 4 per liter, isn't it? So we have here 4 per liter. So therefore, the purchase in Kenya shillings, therefore, purchase in Kenya shillings. What do? We multiply, isn't it? Is there something wrong? Okay, fine. So we multiply because these are kilograms times 8. We must be having beautiful numbers there. If I happen to get that, yeah, 26,300 times 8 per kilogram, 210. This one I cannot. You know, I was almost saying that if this is the kind of money if I get today, I'll stop teaching. But 210,000, I cannot stop teaching. Yeah. 58,800. If it was like 210 million, yeah, that would have been very good, like that. So is that okay, ladies and gentlemen? Thank you so much, Gadonia. Thank you so much. Thank you so much. All right. So then, if we're in agreement, after getting material purchases, which other budget do you think will we be able to do? Labor, isn't it? And labor is dependent on which cost? Labor is dependent on which budget? Production. Labor is dependent on production, yes. Labor is dependent on production. Labor is dependent on production. So labor, if you look at labor, so if you look at labor, ladies and gentlemen, if you look at labor, yeah. Are you able to see in this case here, labor for each product, X standard hours per hour? Very easy, very easy. So we have here labor cost budget. So we have X, Y, Z. Remember, this is purely dependent on production, and don't cheat me. Production of X is not 2,000. Production quantity of X, you guys had given this to me earlier on. Yeah, so production of X, this one here was 2,100, right? How about Y? Was 200, 3,100. So do we have here hours per unit? Yeah, hours per unit. So hours per unit, this has been given to us. Hours per unit. So we have 468, isn't it? 468. And then we have in this case here, total hours. Total hours. So remember, these are hours per unit. So 2,100 times 4. 2,100 times 4. What do we have there? So this is 8,400. 8,400 for 200 times 6. 252. 252, eh? Ah. Hmm. 25,200. 25,200. Okay. Thank you so much. And then lastly, 2,100 times 8. Madale. 24,800, yeah? And remember, these are hours, isn't it? So do we have the labor cost per hour? Labor cost per hour. For each product, do we have labor cost per hour for each product? 3 hours, eh? All of them 3, eh? All of them are 3. So you can come and give us the total labor cost. Total labor cost. So this total labor cost, you have the total hours and you have the cost per hour. You have the cost per hour. The other option, because all of them are uniform, which is really rare, because all these hours are being paid for at a uniform rate, I can just add all the hours, eh? And then I say times 3. But it's just good to be used to getting the labor cost for each product separately. So 8,400 times 3. Yeah, please say without fearing anybody. 25? 25,200, the first one? Yeah, and then 25,200 times 3? 75? 600, and then lastly 24,800 times 3? 74,400, isn't it? 74,400, then you come and add up everything. You add up everything, you have the total labor cost. 175,200. Thank you so much, Achola, as well. 175,200. 175,200, like that. And now that marks the end of our functional budgets. So what have you learned from our class today? If you were to go home right now, and then you get, in this case here, your firstborn kid at the door who asks you, what have you learned today about budgets, functional budgets? Will you tell this kid that you need to mind your own business because you never understood anything? What will you tell this kid? In a nutshell, what have you learned? Yeah, in terms of, in this case here, the functions of budgets, benefits of budgets, you can use that question. Advantages, benefits of whatever, always use POCCC, isn't it? They're useful in terms of planning, organizing, controlling, coordinating, communicating, motivating staff. I love that. That's really very good. Any other thing in the summary that you've learned out of our today's session? I like what Cecilia is telling me. I like what Cecilia, you guys, all of you are very, very bright. Cecilia has drawn something very good for me, that sales budget dash production dash usage dash purchases and labor and labor. And then there is another ninja here whose son would be very happy, very proud of her. Anaitwa Cheryl. Kama kuna son, hiyo ni kusema tu, inawezekana yeye ni msichana mdogo. Amesema the budgets depend on each other. Production depends on sales budget, material. Very good, very good, very good. So what will you be able to tell in this case here, your brother? Let's talk about brother. Yes, very precise. Thank you so much. Great. So can I go to something different? Yeah, before we look at a past paper question, I would want to take you through what we call the flexible budgets. Flexible budgets. Flexible budgets. So first of all, we read there on page number 47, the types of budgets. Types of budgets. Budgeting systems can be designed to suit different levels of activity and management needs. The three major types of budgets are the fixed budget, which is defined as a fixed budget is prepared for a single specific level of activity, and from the name fixed does not change even if the actual activity level differs from the budgeted level. So fixed budget, we prepare it as RCM, knowing, for example, we shall be having 5,000 students. And we shall use this fixed budget the way it is when it comes to controlling, comparing budget and actual. We shall strictly use that budget without altering it, no alterations to it. So it remains like that. We prepare it for a certain level of activity and then assume that that budget is cast on stone. It shall not change. Then we have what we call a flexed budget. A flexed budget or adjusted budget is a revision of the very original fixed budget to reflect the actual level of activity achieved during the period. Flexed budget. Flexed budget. And then imagine we have flexible budget. A flexible budget is a comprehensive budgeting system that is designed to show different cost levels for various levels of activity, e.g. 80%, 90%, 100%, 110% of capacity. So flexible budget is quite theoretical, ladies and gentlemen. Remember, flexed budget basically is changed to reflect the actual output at the end of the year. We say as RCM, we had prepared this budget assuming that we're going to have 5,000 students. But come December, the actual number of students in this case here were, for example, 7,000. You see, the actual has changed. So it means I only change this budget once to what we are calling a flexed budget. But a flexible budget, ladies and gentlemen, is also known as a dynamic budget. So flexible budget, this one after we have prepared a budget, we'll do what we call what if analysis with it, scenario analysis with it. What if our students fluctuate to 80%? How will the profit look like? That's flexibility. If these students in this case here were to go to 110%, how will our profit look like? So we call that one a flexible or dynamic budget that we keep on, in this case here, varying the number of units, and then we see the effect of that variation on our profits. We shall be able to see the difference in a moment. And I would want us down there to look at this particular question, ladies and gentlemen, which is given there. There's a question given there called example 2. Fixed budget for the year. This has been given. Fixed budget for the year has been given. We can see sales is 10,000, each at shillings 10. Are we there really? Example 2. Then I can see direct materials, direct labor, variable overheads, fixed overheads. Then we have what we call total cost 97,500. Budgeted profit is 2,500. Then we have actual results for 12,000 units. So we had budgeted to sell 10,000 units, but the actual is how many units you sold? 12,000. So I can see everything given there. Flexed budget. So then we want, in this case here, to do a flexed budget. A flexed budget is the easiest thing that you should be able to do. Nobody gets a flexed budget not unless you are in a wrong career. Perhaps you are meant to become a sister, Catholic sister. And I'm not looking down on them, but I mean, when you are in a wrong career, some of these things you're not able to comprehend them. So the first thing you're supposed to do is to calculate what we call a flexing ratio. Flexing ratio. So give us a flexing ratio. How do you get this flexing ratio? Flexing ratio, you will take, in this case here, the actual output all over the budgeted output. So this could either be production output or sales output. That is the first thing you need to do. Flexing ratio equals actual output over what here, somebody? Budgeted output. So in this question, ladies and gentlemen, is there anybody who is able to give us the actual output? Yeah, gentlemen who are not giving me answers, I will say that you are meant to become a carpenter. Even carpenters, they are rich carpenters, isn't it? From the statements given, are you able to see the actual output? Please talk to me. Or do you guys want a little break? We continue, right? We'd rather continue, and then we finish earlier. And then we finish earlier. But then talk to me, please. Emily is telling me, Mwalimu, 12,000. Is that okay? I mean, all those girls who are not talking to me, I will say that they were meant to become teachers like myself. So you can see the actual, from the actual results, we have 12,000 units, isn't it? So 12,000 units. All over the budgeted units, there were how many? 10,000, isn't it? So then the flexing ratio is supposed to be 1 point what here? 1.2. 1.2. Let me know, ladies and gentlemen, whether we are together up to here. Omar, thank you so much. And I'm here to reply to Omar. That's very bad on me. We shall overcome. Thank you so much. 1.2. Now, once you have gotten this, you will be here and give us the original budget. You give us the original budget. So this original budget, that is the next thing that you give us the original budget. Give us the original budget. Original budget, are you able to see the sales figure? From the original budget, are you able to see the sales figure? Please talk to your management accounting teacher. So if I go to the original budget up there, the one they are calling fixed, right? I can see sales is supposed to amount to 100,000. Is there anybody who can see that? Oh yeah, especially my physical students now, I can't hear them. I can't hear them. Maybe they don't have the question, right? Do they have the question? Do you have it? Yeah. So in this case here, sales, it is 100,000 Kenya shillings. Are you able to see DM? DM is how much? DM is direct materials. 50,000. Are you able to see the DL? How much? 55,000. 25,000. Are you able to see the VO? VO is variable overheads. 12,500, isn't it? 12,500. Are you able to see the fixed overheads, FO? Fixed overheads is how much? 10,000, isn't it? So please go ahead and give me the net profit. Net profit. Then whenever you're doing this flexing, don't be writing like these figures in brackets. No, don't put them. It's upon you to know that now to get profit, I'm taking 100,000 minus all these expenses. So 100,000 minus 50,000 minus 25,000 minus 12,500 minus 10,000. So then how much are we able to get? Bubbling. She's giving me 10,000, right? So in this case here, the net profit. So you take sales revenue minus all the expenses. Sales revenue minus all the expenses. 500 only. 2,500, eh? 2,500, isn't it? Now from there, come and give us a column here for flexible budget. Flexible budget. Or flexed budget, doesn't matter. Flexed budget. Give us a column there. So we are going to flex those things that change as we do business. We only flex all those dynamic things. Like sales. Is sales ever constant or is it dynamic? Dynamic because like the more the students, the more the revenue. So sales is dynamic. So this one here will be multiplied by 1.2 to get flexed. How about direct materials, dynamic or fixed? Dynamic means, of course, variable. Any expenditure that is direct in nature is variable. It's dynamic. And dynamic is not a very, very special name. It's not a big word like dynamo. Dynamic basically means what that can change. It can change. So any figure that will change has to be multiplied with 1.2. Even variable overheads, even the word variable tells you. How about fixed overheads? Will it change? No. Like rent. If you're paying rent of say 200,000 for this room, ladies and gentlemen, even if we were to stock 1 million students here, rent will remain the same. The landlord will not come and tell us, you know what, our building will be collapsing. Now we start paying us more. No. Rent will always remain constant regardless of the number of students. So is that okay? Yeah. So then give me these answers. So like now 100,000 times 1.2. I'm waiting to hear from the online students. I'm waiting to hear from the online students because now we are taking this 100,000 times to get the flexible budget. So I'm figure of 120,000. The online students are not giving me. They're not following. They're not following. They're not following. They're not following. So 120,000. Then we have here 1.2 times 50,000, which gives me 60,000. Is that okay? 60,000. So 1.2 times 25,000. 30,000. 30,000. And then we have 1.2 times 12,500. 15,000. So for fixed overheads, do we write 0 here? The same figure, isn't it? Yeah, it will remain the same. This one is never flexed. It's fixed. It remains the same. So then could you kindly come here and give me the flexible budget profit? The flexible budget profit. So you take 120,000 minus 60 minus 30 minus 15,000 minus 10,000, which will end up giving us what figure? 5,000. Great. Thank you so much. 5,000. So the flexed budget is always compared with the actual results, the actual P&L, the actual results. So we ask ourselves, has the examiner given us the actual results table anywhere there? Has the examiner given us the actual results table there? But first of all, before I go to these actual results, are we able to follow, especially these online guys, ninjas? Are you able to follow from wherever you are? Thank you, Akinyi. Thank you, Sarah Ekerongo, something like that. Everybody, great. Thank you so much. Great. Those yeses are very, very many. Those yeses are very, very many. Yeah, those yeses are very, very many. So the actual, are you able to see the actual results, Wewe? Like the actual sales is how much? 122,000. The actual results are 122. Sales is 122,000. All right. How about actual direct materials? From this table, actual, are you able to see 60,000? Now, because you don't want to talk to me, I'll just write everything myself here. 28,500, 15,000, and then we have 11,000, isn't it? 11,000. And then the net profit from the actual, it's given here, the net profit. Is it 7,500 or something? So come here, always the examiner will ask you to provide the variances. Your examiner will ask you to provide a column of variances, which I taught you how to do in our last session. A column of variances. Please give us a column of variances. So variances, ladies and gentlemen, please, we start. You see, when we are getting variances, it's like this original budget is not there. But of course, for exam purpose, you can't cancel, eh? You simply choose to close your eyes towards this. So you're only comparing flexible and what is somebody? Actual. So like now here, it is 122,000 minus the actual of 122. 120 minus 122. Which gives me how much here, somebody? Huh? 2,000, eh? So is this adverse or favorable? Adverse or favorable? Because as we had planned to sell just 120,000, but we ended up selling more. So then that will become what here? Favorable. Thank you so much. We go to the expenses. Expenses, I can see 60,000 minus 60,000, giving me 0. Adverse or favorable? Neutral. 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 30,000 minus 28,500. How much? 300, eh? Now, favorable or adverse? Uh-huh. Uh-huh. Yeah, it's a cost. It's a cost. I had planned in this case here to incur 30,000. And then God's grace has given me, in this case here, a cheaper option. I should thank my God, isn't it? So this automatically becomes what here, somebody? Favorable, 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 favorable. All right. Next one is 0. And then we have 1,000. 1,000 what here, somebody? Whenever an expenditure is more than what we had budgeted, that becomes adverse. Adverse, isn't it? This expenditure is more. It is, isn't it? Yeah, it's a higher than what you had budgeted for. So in this case, yeah, that's 1,000. Adverse. Adverse. How about these profits? Can somebody get this difference? 5,000 and 7,500. How much do we have there? 5,000 and 7,500. How much do we have there? So is this adverse, the difference, or favorable? See, the profit has gone up. I mean, why would you say adverse? The profit has actually gone up. Profit has actually gone up. So it means what here, somebody favorable. And you can try to also argue it from here. You see 2,000 favorable, that's plus 1,500 favorable. That is what here, 3,500 minus. Will it end up giving us 2,500 favorable? Yes. But again, if you're a very, very good student that I've taught in the past, you know that you don't have to go through all this to explain. If I were you, I would always know how to get variances for sales. Variances for incomes, including sales. Profits, etc. I normally talk of AB. Actual minus what here, somebody? Budget. AB. Actual minus budget. And then in this case here, variances for expenses. variances for expenses, we talk of bar like that. Bar. That is B minus what here, somebody? B minus A. And if you do it this way, then whenever you get a positive answer, it becomes favorable. Negative answer, it becomes what here, adverse. Let's do this together. Let's do this together, we see. We start with sales. So sales, I will take what minus what? Remember, sales is AB, so it's actual minus budget. So actual will be 122 minus 120, which gives me how much? 2,000, right? So is it positive or negative? So if it's positive, I write what here, somebody? Favorable. Favorable. If you're following this approach, sales and any income like profit is an income. Yeah. Then you come in this case here, all these down here are these are expenses, isn't it? So for expenses, which approach are we using? Budget minus bar. Budget minus actual. 60,000 minus 60,000, 0. So 30,000 minus 28,500. And because it's positive, what do we do? It's favorable, isn't it? If you're using that concept of bar, budget minus actual for expenses, you can never get it wrong. 15,000 minus 15,000 is 0. You come here, the last one is also an expenditure. So it is budget minus actual. 10,000 minus 11,000, that gives me minus 1,000, isn't it? But you see, I can't write minus. I write what here, somebody? Adverse or unfavorable, isn't it? Or unfavorable. And then now when you come here, a profit is an income, isn't it? So income is always income. Yeah, incomes, AB, actual minus budget. 7,500 minus 5,000. I'm getting 2,500 positive, which is what here, somebody? Favorable. I don't know whether you've been able to pick something out of this, but I believe once you reach, you'll be able to have a look at this. Is that okay? Is there somebody who has been able to see what I've done here with AB and bar? Or you have seen Baba? At least they have seen something, isn't it? At least they have seen something. At least they have seen something. So, and I'm so sure this is what you guys did in the last class. Is that not what that's what you did? So now you have got an opportunity to revise even better. Because now when it is being done the second time, then automatically you get to do what you have to revise. You get to revise. You get to revise. So then write for me there, cash budget. Cash budget. And I would want to do this in our tomorrow's class. After that, now we'll be doing standard costing here. Yeah, you got it right. Great. Thank you so much. Thank you so much. Thank you so much. Is there any past paper question on flexed budget you would want us to try? Flexed budget or even a functional budget. Somebody who can give us one question to try tonight. I don't have my past papers here. Flexed budget, because this will come. Flexed budget. Francis, thank you. Now this is perfect here. This is perfect. This is perfect. This is perfect. This is perfect. And then, of course, all the students who are following me today through YouTube, I expect you, at the very least, give me a subscription. All the students who are just with me here on Zoom, if you go to YouTube, please search for Joshua Aura and ensure that you give me a subscription. I will really, really be forever grateful. Yeah, so somebody wants us to do May 2019, question number 5. 2 questions, please. Thank you so much. May 2019, question number 5. Only 2 questions. I don't want too many. Only 2 questions. May 2019, question number 5. And ensure that you do them. The assignments, you do those questions and post the answers on WhatsApp. Everybody should post their answers on WhatsApp. Yeah, of course, this class is block release, December 2024. Question. December 2024, question number 4. December 2024, question number 4. Then I'll be able to guide you slowly in a way that you guys, everybody shall be able to pass. RCM is not here to enable you fail. We are here to enable you finish your CPA journey quite fast. Yeah. Otherwise, thank you so much. Good night. See you tomorrow evening. Bye. Tomorrow evening, remember, we have a class. We have a class on Saturday. We have a class on Sunday. By the time we finish this weekend, every syllabus, part of the syllabus, should be over. Should be over. Tomorrow time jockey is always 6 p.m. 6 p.m. Saturday time is p.m. 12. Saturday is always at 12. And then Sunday or Saturday is 4. Saturday. Okay. Great. Saturday is what time?